Let's begin perhaps by taking a look at the market today. We see it continuing to be under pressure. Would you have any specific reason why investors seem to be bailing out of stocks?
Basically, if what we're actually hoping is that the earnings results that are coming in from most companies are going to boost the market, which has actually not happened. So it brings down on the factor of the North African crisis that is happening is having a bearing on foreign investors who normally drive volumes in the market and normally drive the Nairobi Stock Exchange. And with them at bay and their volumes not that much, we expect the market to remain under pressure.
I would imagine Kenyan investors would also be looking at this and thinking perhaps there's an opportunity here. Surely there must be some counters now that are beginning to look attractive on a local basis.
Yes, if you are a good investor, this will be the best time to buy. Because I'll give an example of most of the banking stocks which announced very good results and very good dividend yields. Actually, I'll give an example of KCB and even Barclays, who have dividend yields around 6%. If someone is to enter into those two counters at their current levels, they're in for a bit of capital growth but an assured 6% in dividend income.
Now, you talk about the banks, and we have seen some very good results coming through, and yet at the same time we have seen them continuing to be under pressure. Now, we do know, of course, that the government is uncomfortable about some of the profits that have been declared by the banks, and we can look at some of the results that have come through today. What's your take if you were an investor looking at this? Would you say you should have gotten into the banks earlier and perhaps right now is not the time to be tiptoeing in there?
No, not actually. If you look at the growth of most banks, they've been gradually growing, and entering at certain levels would be the best time to enter into some of them currently right now. Most banks are rather fairly valued, and especially if you enter just for the income, not even for the capital growth, and enter for the income.
Okay, can we talk about the things that you gave me for sterling? Okay, go on.
Pardon?
Go on, I was listening to you.
Yes, I was saying, yeah, so basically if you're entering for income and not for capital growth, this would be the best time. And if you're investing for the long term. The problem that we have with the retail investors is that they're in for the quick buck. And that's something also that has been putting pressure on the market. But if you look at the market as a whole, most counters went up by 100% last year, 80%, 70%. So for a rational investor, you're trying to think, why am I entering a company that has gone up by 80% in 12 months? Sense would say normally this counter should go down. Yeah. So it's a tricky balance.
Well, let's talk about the news that have just come through. We had the Finance Ministry, PS, saying he will not intervene into the currency markets now. Of course, we do know their hands are a bit tied to the extent that they're able to intervene and direct the flow of the shilling. But we are beginning to see it impacting on companies. We've got East Africa Portland Cement now seeking to find ways of easing the pressure on its loan repayments because of the depreciation of the shilling. What's your view? Is the depreciation of the shilling here more detrimental than it is beneficial for Kenyan companies, particularly given that we do know it would be good for your exporting counters?
Yeah, for the exporting counters, I don't think any of them are really actually complaining, especially if you look at, maybe I'll give a sector of tea, where tea prices have been softening with time. So a weak shilling makes Kenyan products a bit competitive. But knowing that we are a net importer, not a net exporter, a weakening shilling cannot be beneficial to the economy at large. For East Africa Portland Cement, really, there's nothing the government can do. They took a yen loan without thinking of the effects in the long run, and the yen is benefiting internationally. So there's really nothing, as in, I agree with the PS. Them intervening is trying to throw money down a pit. Yeah. Because the depreciation of the shilling is not locally driven. It's the dollar and the yen strengthening internationally. Yeah.
But Reginald, we have seen other emerging market governments stepping into the markets. I mean, here in South Africa, we do know that the National Treasury has actually set aside a pool of money to try and prevent further strength of the rand. And we have also seen other emerging markets, including Brazil, your Indonesias, your Turkeys, etc., coming in. Would there not be a case for the government to try and cushion companies against the weaker shilling?
I like your examples, Mr. Mutizwa, because if you look at the companies that you have mentioned, look at the reserves that they have to play with. You're looking at a country called Kenya, where they're having infrastructural problems, they have a drought on their hands, they have a looming budget deficit. And any further action to try and get more money to try and stabilize the shilling might have more detrimental effects on inflation. Now you'll have local importers driving down the shilling and not even external.
Yeah. So where to now for the Nairobi market now? I mean, with the pressure that we're talking about, the foreign investors bailing out, and you've got now inflation on the march, and now you have the government coming in and saying, hang on, we're not about to spend our money on the shilling. Where does the market go from here, and what do investors do?
Basically, I think the view on the market currently is most counters are overvalued. As much as the results are good and the dividends are good, the basic theology on the market right now is that the market is overvalued. If you look at your indicators, your 50-day moving average, which crossed the 200-day moving average, just highlighting that we're getting into a bearish period. And I see the gap between the 200 and the 50 actually widening as we go along. On foreigners are actually buying. They've been active on Kenyan, they've been active on EABL, they've been active on Safaricom and CFC Stanbic. So for them, they're looking at it, whilst everyone else is selling, let us buy in, and what is everyone should start doing. And that's the demand that we need in the market right now.